Is it currently a good time to be looking at buying into Alibaba? In this video, we're going to be trying to find out exactly this by looking at some of the news surrounding this company and putting their data into my system to see an intrinsic value. If you are short on time, here is the rundown. Alibaba is a Chinese company in which specializes within retail. My system is predicting this to be a buy at the moment. However, there are some caveats to this. So if you do have time to stick around, let's get into this video. So what are Alibaba? They are, as I said at the start, a Chinese e-commerce company. Alibaba are also China's largest cloud server provider, offering solutions for AI, machine learning and big data processing. This competes with AWS, which is owned by Amazon, and Microsoft alongside with Google. They also offer financial services through not directly under Alibaba, but a company called Ant Group. It's a finance tech affiliate. It is a significant part of their ecosystem as it operates Alipay, which is a leading mobile payment app in China. So what are the key financial metrics for this company? So market capitalization varies based on recent stock performance, but generally in a range of 200 to 300 billion US dollars. Revenue dominated by e-commerce, but cloud computing and international e-commerce are rapidly growing. Profitability, historically profitable, but in recent years have seen margin pressures due to regulatory scrutiny and reinvestments. So it is clear that there is a bit of issue for this company going forward, and I do believe that with a Trump presidency, this company could be under a bit of pressure just due to the amount of tariffs in which they are planning to bring in the States. But despite that, a lot of people are quite bullish on this stock still, such as Michael Burry, who is the guy who predicted the Big Short. But there is a famous saying that Michael Burry has predicted the last 6 of the last 4 financial crashes ago, something like that. He's very bearish, and he's always bearish on the US economy. He recently sold his American positions and bought straight into the Chinese economy. So it will be interesting to see if he is right with that. Some of their competitive advantages are their scale, as they dominate China's e-commerce market with over 1 billion active users. Its interconnected businesses create a comprehensive ecosystem, making it harder for competitors to match its services in which it can provide, and technology as strong investments in AI, cloud computing, and logistics infrastructure. So it is heading in the right direction with the tech firms for sure, as it is looking into AI and it does have cloud computing capability as well. So it is more than just a e-commerce platform in which I think most people originally think when they think of Alibaba. So let's look into this company a bit more. So it trades on the New York Stock Exchange and the Hong Kong Exchange. It does often trade at a discount compared to its US tech peers, reflecting geopolitical and regulatory risks, with potential growth being strong in cloud computing and international expansion, but depends on easing regulatory hurdles, which again is a bit in the air at the moment. So what is the news surrounding Alibaba currently? As of December the 17th, Alibaba announced the sale of its Chinese department store. However, I don't think this is too particularly good for Alibaba, as this resulted in a 1.3 billion US dollar loss. Following this announcement, the stock declined by 1.1%. Investors expressed concerns over the company's strategic direction and broader context for a weaker consumer spending in China. This being evidenced by a modest 3% year-over-year increase in retail sales for November. However, this does align with Alibaba's broader restructuring strategy initiated in March 2023, which reorganized the company into 6 independently run entities. So it is interesting to see where they are taking this company, with Alibaba remaining the dominant force in global advertising industries. Projections indicate that the industry will surpass $1 trillion US in revenue for the first time in 2024. With Alibaba alongside Amazon, Alphabet, Meta, and a few others capturing over half of the global expenditures in advertisements. So it is clear Alibaba is definitely a key player in global politics as well as the stock market, so it is interesting to look at this company. With that being said, we're going to put their finances into my system to see whether or not their intrinsic value is currently above what their current price is or below. Before we get onto the intrinsic value and Graham's formula, we're going to look at the quick liquidity for the last 5 quarters. So here we can see a total debt to liquid cash ratio, and we are currently above 1, around the 2-point mark. Trend lines are expecting these numbers to start to decrease in the next coming quarters. Personally, I think they will be a bit stable. Again, it is a bit difficult, but this looking relatively positive for Alibaba on a liquidity here. And for a retention rate, this is a bit iffy for the company, with it being such a large company in the Chinese market. The retention isn't that good, but again, this could be attributed to the absolute like super small prices in which they put on things. However, saying that, in the last quarter, they reported an 18% retention rate, which is actually quite good. And despite this, they're projected to go up, with the trend lines indicating a higher retention rate in the next 2 quarters. And now looking quickly at the free cash flow, this is actually very volatile. It's not ideally what you want to see for a company the size of Alibaba. This will be used for stock buybacks, paying out debt, or paying out dividends, in which they do pay a dividend yield out. But again, this is quite weird to see them not use any operating cash flow at all in these few quarters here, so it is a bit weird. Historically, Alibaba has been a cash generating powerhouse due to its dominant position in the Chinese e-commerce market. However, this could now be due to regulatory pressure on the Chinese market, and as a result of that, they are seeing a drop in their free cash flow. Furthermore, with the weaker consumer spending in China, this could also be a big factor, along with elevated capital expenditures for logistics. So quickly looking at a 365-day exponential chart, we can see the trend line here in which we are currently below. So are we expecting to meet back up with this trend line in the future? Potentially. Again, with this stock, it is really quite difficult to actually understand, with there being so many geopolitical conflicts within it. And looking at the 91-day moving average, this is actually projecting a decrease. So potentially we won't see us meet the 365-day moving average. Again, very difficult to tell. Some of the figures for this company are a PE ratio of 17.44, a 52-week high of $117 and a low of 66, this being a difference of 51, and a current price of 87. We also have a beta rate of 0.29, which means, I believe this is comparing it to the New York Stock Exchange, the Nasdaq in this case. We are basically not as volatile as the Nasdaq by 0.29 times, so that could be seen as a negative for this company. Looking at the sheer volume of shares being traded in the graph at the bottom here, we can see that we are massively down at the moment compared to the average. I'm not entirely sure why that is. The markets are currently open as of recording this, so potentially there's just not a lot going on. Although it was only yesterday, as of recording this, that they did announce that selling of their retail stores. So it is a bit strange to be seeing this being so low. Okay, so now looking at Graham's formula, which is probably what a lot of you have been waiting for here, we can see the intrinsic value of the share. On the left, we have the original. On the right, we have the revised, more bearish formula. Using the earnings per share growth rate and the current yield AAA bond for the American market, that is. So this will be varied depending on when or where you're watching this from. You should always do your own research into this, but according to my system, we have an intrinsic value on the left of $159 US, and with a margin of safety of 75%, it puts an acceptable buy price at $119. So with the current price being at 87, it is giving us a buy indication, which I would say is actually really positive for this company. However, when we move over to the right here, we can see a more bearish formula, of course, and we are getting a acceptable buy price with the same margin of safety at 75% of $70, where to be fair, we are at 87. It's not stupidly overvalued according to this. And now looking at the Lynch value, we can also see how overvalued this stock actually is using the growth, the dividend yield, and the current PE ratio. So we have a result here of 0.76, which is just less than 1, which actually tells us this stock is overvalued. However, this formula can seem to be very bearish at times. And according to the original Graham's formula, it is a buy. So going in between the two, I will be putting this at a hold. But again, that's for more than one reason. And I'll explain that now before we get onto what the actual analysts think about this stock. So in my opinion, this stock is just a bit volatile. I think their finances are actually really good, and they do seem to be looking to improve. I do think this stock, in my opinion, is a slightly undervalued currently. I do think there will be high growth, but again, that is attributed down to geopolitics, and I don't see that going in their favor in the next, potentially 4 years, to be honest. So for that reason, I don't think it is up to Alibaba on how well they are able to perform currently. So I just think it is a bit of an awkward time to be buying into the Chinese market. But that is just my opinion. Let's now see what the analysts think. Again, I don't hold any Alibaba stock, so I'm not biased towards any stock. But it's just my own personal opinion based off of my own knowledge and research. So you should always do your own research. So let's see what the analysts are saying for this stock. So looking on MSN here, we can see there is projected to be a lot of volatility in the next 90 days. My personal opinion on where this is going to go, I do think we're going to see a bit of growth, but I don't think we're going to quite reach the $100 mark, but I could be definitely wrong with that again. Realistically, this company should perform well, but it is all up to geopolitics at the moment. And based off of 44 analysts, they are saying it is currently at a strong buy, which personally I do disagree with. I would be tempted to put it at a buy. A strong buy I think is a bit outrageous, but I could definitely be wrong on that. So what could the future hold for Alibaba? They have a strong Chinese dominance, of course, already, but they could potentially be expanding out into at least Southeast Asia and potentially globally. They already are global with the likes of AliExpress, but could they bring a stronger, more dominant force to compete with the likes of Amazon or eBay? I do personally think, and this might change mine and even your opinions with this stock, is that the fact in which they are trying out cloud computing and enabling more growth through this is a definite positive thing for this company, as an increasing adoption of AI in big data and digital transformation globally offers a significant potential for Alibaba Cloud through a competitive market, as it will be bringing competition to AWS and Google, of course. Furthermore, investment in autonomous driving and AI-powered solutions via partnerships with startups and R&D initiatives will definitely be a positive thing for this company, as in the future, these investments could align with broader shifts towards smart mobility, energy efficiency, and sustainable solutions, providing a new revenue stream for the company. Furthermore, AliExpress owns valuable data on consumer behavior, which can be leveraged for targeted advertising and AI-driven services. This could be capitalized on in the future for sure, with rising demand for streaming content and AI-generated media progressing through the market currently. So it is not all doom and gloom for Alibaba. Personally, I won't be buying in just due to the geopolitical concerns currently, but I do think it is a good stock. I do think they do have high potential in the future. So I would revise my hold from what I saw from my system, and I will be actually putting this at a buy. I'm not going to be putting it as a strong buy, but for me, I won't be buying in just due to the geopolitical concerns. So as a conclusion, Alibaba has a significant long-term potential due to its e-commerce and ecosystem, cloud computing leadership, and investment in innovation. However, its success depends on how well it navigates regulatory, geopolitical, and competitive challenges, which I have discussed. Investors and analysts are closely watching developments in its market, looking at profitability, revenue, and global expansion efforts. So that does conclude this video. I hope you have enjoyed it or found it useful. Again, I'm not a financial advisor. You should always do your own research before looking into buying into a stock. So with that being said, please do leave a like, subscribe, and maybe even a comment, and I'll see you for the next video.